Well, what's going to happen next when it comes to the Fed? Expectations for Fed policy, they've become cloudy in the wake of the failure of Silicon Valley Bank and Signature for that matter. Here to round up the Wall Street chatter on interest rates, there is a lot of it. Yahoo Finance's Jen Schonberger is here with us now. Jen?
Good morning, Julie. That there is a lot of differing views on whether the Federal Reserve will raise rates at its next policy meeting in light of that somewhat hot CPI data we got yesterday. And in the midst of these bank failures in Silicon Valley Bank, take a look at the Fed funds futures this morning. They have been fluctuating quite a bit. As of 9:45 a.m. Eastern, the CME showing a 54% odds for a 25 basis point rate hike and 45% for no hike. How much has changed in just a week? A week ago, Powell opening the door for a 50 basis point rate hike. All of this after yesterday's consumer price index, excluding food and energy, showed that it rose 0.5% in February. That was a mild re-acceleration on a consecutive monthly basis, underscoring inflation remaining high here. So here's a look at how analysts' expectations are shaking out right now. In that 25 basis point rate hike camp, we have JP Morgan noting that strength in inflation is keeping pressure on the Fed to hike. Similarly, Morgan Stanley citing a strong reading on the services inflation, which necessitates a 25 basis point rate hike. Morgan Stanley economist Ellen Zentner writing, we see the data firmly supporting another 25 basis point rate increase in March and risks of more elongated tightening cycle beyond our current forecast of a last hike in May. Now, also in that 25 basis point rate hike camp, Wilmington Trust and Piper Sandler. On the flip side, in the no hike camp, we've got Goldman Sachs holding on to its call for no rate hike, citing stress in the banking system. This is down from their previous expectation for a 25 basis point rate hike. Goldman Sachs's chief economist Jan Hatzius saying there is, quote, considerable uncertainty about the path beyond March. But he's leaving his expectations unchanged for 25 basis point rate hikes in May, June, and July. He expects the terminal rate to end at about 5.25% to 5.5%. Now, also in the no rate hike camp is Moody Analytics chief economist Mark Zandi, in light of the uncertainty in the banking system. And I just want to point out one outlier, Nomura Securities, calling for a 25 basis point rate cut and a halt in the wind down of the Fed's balance sheet in March. They are citing all of the turmoil in the banking system. They were in the 50 basis point rate hike camp even before Powell spoke. So just giving you a sense of how things have changed so much just over the past week. Of course, Julie, as you know, this all shaking out next Wednesday at 2 p.m.
Yeah, the suspense will not last much longer, but it is suspense given all of those notes. I mean, basically no one knows what they're going to do. Thanks so much, Jen. I appreciate it.